Welcome to a short update in which we are going to discuss the price action of Bitcoin, which have been correcting during the past week, and we are going to talk a little bit about why that is important to understand and which levels you should be watching in this short update. But before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our free trade letter. Yesterday we have been making a complete altcoin setup trade letter, which you can find in the description beneath. Also, if you want to join our partner, you get the ability of having up to $8,000 in bonuses and 15% discount on the trading fees. So let's get towards the update, which is about Bitcoin, and I've got the weekly chart up here. The weekly chart itself is quite clear, right? We are acting beneath the 200-week MA, we are acting beneath the 200-week EMA with Bitcoin price action, which is currently just stabilizing around the area of 22k to 25k, in which we have been having a corrective move, which has been pushing down the altcoins as well. So what are we looking at in terms of the markets further? We are not only looking at Bitcoin itself, we are also looking at the total market cap, which is on a crucial level at this point. Why am I saying that? Well, we do see that the total market cap has been retesting the high of 2017, and the retest has been resulting into a double bottom structure in which we were creating this bullish divergence, and therefore we started to make a new higher high, and now the market is seeking for a new higher low. Ultimately, the total market cap is above the 200-week EMA and MA, although we are currently looking like we are losing those levels unless we are going to have a significant green week next week. As you can see here, the light blue line is the 200-week MA, and the other blue line is the 200-week EMA, in which we're just in between those two. If we lose the 200-week MA on the total market cap, it is probably going to mean that Bitcoin is dropping towards 19.7k, and the total market cap will drop towards 815 billion, dragging down the markets by another 15%, and probably altcoins dropping another 20% in total. Although if we do hold on the 200-week MA and we flip back up, there's a reasonable run to be made towards 2 trillion, which is a 2x for the entire market in the coming period. So we're on the crossroad of a potential significant move to be made in the next few weeks. If we are holding above the 200-week MA, it's going to be significant. But ultimately, the odds of being at the bottom with the markets is quite significant. I think the bullish divergence and double bottom structure is definitely what we're looking at. And therefore, with this weekly bullish divergence, there are many arguments that we are on the edge of having a higher low. If we lose the 200-week MA on the total market cap, we are looking at 850 billion next. If we don't lose the 200-week MA, this is the area where you should be buying into. When we're looking at the altcoin market cap, it's more beneficial. We can see that we are still above the 200-week EMA, but if we have a slight corrective move of around 10%, we are still above the 200-week MA as well, shouting for continuation. I think if you look at the charts overall, these corrective moves are all just periods where the price is going to be stabilizing into a channel or into a range, therefore continuing the momentum to the upside, or at least claiming that we are going to have a period of sideways action probably until the Fed is going to finalize their meeting, or the next case, in which right now, given that inflation numbers are a little bit higher than expected, the expectations are that the hikes will continue to last longer, more hikes, and therefore the prices start to dwindle down a little bit. And therefore, if the Fed starts to continue following the policy and only raises by 25 pips, it is very reasonable to expect that we are just having a normal correction inside an uptrend, resulting into further momentum to the upside here. Why am I saying that? Well, if you look at the DXY at this point, we can argument that it's facing a crucial resistance, which means that we are into an area of resistance around 106 points. We are having this bounce, and therefore risk on is not doing too well at this point, but we are still into a downtrend on the DXY. If the Fed continues the 25 bips policy and wants to pause the hikes, the DXY starts to turn over, and also with strong economic data, we most likely are going to start turning over with the DXY because the strength is just back up and the DXY is going back towards equilibrium, as this entire move was an over-exaggerated move to the upside, and now we're probably going to have an over-exaggerated move to the downside before it goes back to the mean, resulting that if we find resistance over there, resulting into Bitcoin having a bounce back up. So if we're looking at the lower time frames for Bitcoin, we can ultimately say that we had a crucial area that we needed to break through on the price action, right? We had to break through 23.8, we couldn't, and therefore we are currently stabilizing, in which we are constructing a range. Anything above 21.3 is still fine to hold as support. If we find ourselves support there, it seems very likely that we're going to continue the rally in the coming period, but those rallies take time because after the correction it always ends up in the sideways period before we can start accelerating. So at this point with the price action here, people are eager to start shorting the markets or get out of the markets, while right now it's actually a period where you should be looking into longs on the markets. If we lose the 21.6k level, it is very likely that we're going to look at 19.7. So then I'll be looking at buys around those zones and I get stopped out. But if we are going to bounce up from here, I think the crucial levels are 22.8. And also the area around 23.2 is going to be a crucial one to break. So probably then we are having a bounce towards 23k, have another correction, and then the reversal starts to take place on the market. So ultimately, I think you should be looking into longs rather than shorts. If we lose the level around 21.6, start looking at 19.7 and use the DCA strategy. I hope you have been enjoying this update. I'll be back tomorrow with a fresh new one. Ciao.